Why don't they make as much? Or what is the insurance company doing? Are they scamming me? Saying, yes, I can make more money than that in the stock market. But then they'll lower it drastically after the first year. You should not feel shy on doing so. Hey guys, John Stevenson, the Guaranteed Retirement Guy. Thanks for tuning in today. We're going to be talking about one of my clients that I'm helping right now purchase a fixed index annuity with Delaware. He is not looking for lifetime income, but he is just looking for legacy. He wants growth, and he wants it with a decent annuity company that does not lower their participation rates, or if they do, not very much. And so I happen to know that Delaware is pretty good with their S&P 500 participation rates, and they like to keep it as high as they can year over year, which is really important when you're looking for renewal rates, especially if you're locked into something for 10 or 15 or 20 years. You want to make sure you're getting as much growth as possible. So for him, he's putting in $200,000, and he's going to let it sit and grow. And after 10 years, it's projected to grow to $431,000. I know what you're saying. Yes, I can make more money than that in the stock market. And I agree. You absolutely can. And he has money in the stock market too. He just wants to protect some of it. Okay, and he's okay. He's okay making a little bit less for the cost of the protection. Everyone's different, but for fixed index annuities, they do provide the protection against market risk because they're not actually in the stock market. The insurance company buys call options associated with the index. If the index, of course, experiences growth, then they will exercise those call options and they will make money, and so will you. If the market is down, they're not going to exercise those call options, and they'll just lose the cost of the option, basically. And so that's why when they do make money, they don't share all of it with you, because they have to make a profit and they have to cover the cost of the options and cover the cost of the options that they don't exercise. So it's nice to know the how on these annuities and how they work and why insurance companies do what they do. Because people are wondering, well, why don't they make as much? Or what is the insurance company doing? Are they scamming me? It's like, no, it's just the cost of protection, okay? They got to make money and you got to make money, and they're trying to give you as much growth as they can, at the same time protect themselves and protect you. And so it's a great way to protect yourself from market risk. It's a great way to get some growth. And I see clients that have had these for decades, and they do very, very well with them. Yes, they're not as high as they would have had if they had them in the stock market, but those people also have a lot of peace of mind, and they're okay with that. So you have to ask yourself, what is your peace of mind worth to you? And he's not using all of his portfolio. He's only using $200,000. So he's using that to protect himself, get some growth, and leave it as legacy for his kids. Anyways, I think it's important. It's important to talk about that. I talk about these a lot, but I just wanted to tell you about this one because this one is giving him a 55% participation rate in the index. Yeah, it's not giving him all of it for sure, but it's not giving him as much as maybe others would give him as far as participation rates. There are other ones that'll give him like 60 or 70%, but then they'll lower it drastically after the first year. So I don't want to put him into something almost as bait, right? To get them into a product where it'll make them a lot of money in the first year, but then hardly anything after that. It's kind of like a bonus product. You can get a bonus product and you can get a 20 or 30% bonus up front, which is great. But then after that, your earnings are like 3%. It's not great. Not great for, if you want to have something long-term, you want long-term growth. I don't recommend it. Anyways, I could sell you anything. I mean, I could sell you an Allianz annuity and make way more commission than I could make selling this one. But I know over time, you're not going to make as much money because they lower their rates a lot. So they've got really good annuities for certain instances, but for the growth ones, I just don't feel comfortable recommending them. If you're going to do anything growth, any indexed annuity growth, pick a company like Delaware or Lincoln or Gillico. Like those are good companies that like to keep their rates as high as possible for the S&P 500. You can pick other companies that'll give you huge rates, like 200%, 300% participation, but they're on brand new indexes that they just back tested, and you are the lucky one to get to try it out. And most of the time, they don't work. In fact, I've never seen them work. There's always a chance they could, but I haven't seen them do very well. Most of the ones that do well are with the S&P 500 or with NASDAQ or PIMCO. Allianz has had some decent growth with the PIMCO index. So I won't throw them under the bus for everything. They do have that index, and they actually own it. So anyways, that's some decent growth. But I do like being in the S&P 500. If I can get that but still have market protection, then I'll take it. So anyways, hope you enjoyed the video. Hope this makes sense. Hopefully it's giving you some clarity. If you are looking to purchase an annuity and you're looking for the highest rates, okay, and you're looking for someone who's transparent, who's willing to show you everything, even if his commissions are going to be cut in half. Because a lot of these commissions don't pay me very much. I might get paid 1% or 2% or 3%. I'd love to make 8 or 9, but unfortunately, a lot of those that pay me that amount, they are not the best option for my clients. And so I rarely recommend those, unless of course it is in the best interest, but most of the time it's not. So you gotta just, when you work with an advisor and you're looking for someone who's trying to sell you something, everyone wants to make money. Everyone has an agenda, right? Work with someone who's at least willing to show you everything and then at least let you make the decision on your own. And if you want to ask them how much they make, you should not feel shy on doing so. And they should not feel bad telling you. Okay, a lot of people will get nervous and they'll try to get out of it and not share it with you. But I don't care if you're going to be working with me and you want to know how much money I make on whatever I'm recommending, I'll tell you. So anyways, check out the creek. See the creek there? It's beautiful, beautiful, beautiful. About an hour south of Tahoe, and drove up Ebbets Pass and found a place with no snow. So anyways, all right, hope you enjoy the views. If you like the channel, like, subscribe, share, comment below if you got questions. I'll be happy to help. And again, if you're looking to purchase an annuity, there's a link below this video. And there's also a link at johnstevenson.com if you want to book a call there. And you can search annuities there, as you know. So anyways, thanks for watching. We'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.